Welcome to Markets Now. I'm Michelle Rook with Brad Kooima Kooima Varilek, seeing a lot of green on the board, and both grain and livestock futures trade today. And Brad, even though we're seeing green on the board in the cattle market, let's talk about what happened yesterday. The market got a little bit spooked, even though we had strong cash and cutout values. What spooked us yesterday?
Well, thanks for having me on. Of course, I enjoy this. One of the things, of course, you got to preface it a little bit with, okay, the feeder cattle have been a big part of this whole move, a big catalyst, been the leader for sure. Months here, and the feeder cattle futures that had a $20 rally in 4 weeks or so. So that's unusual, right? So you get overbought, you get, high speed wobbles, however you want to describe it. But when it goes up this fast, the old saying for us old commodity brokers are up on the stairs, down on the elevator, right? It does set you up for those kind of volatile days like we had yesterday. But I contend that, and not everybody agrees with me, but I believe that there's still what I call these headline algorithms, these trading systems, these computers that are programmed to react to certain phrases and certain news items. And what I'm talking about is yesterday's announcement that Tyson made a big splash about it, how they were closing their Emporia, Kansas cattle plant. February something's going to be the last day for most of the help and all the rest. Obviously, a plant closure would be very negative. You guys, anybody's old enough to remember Denison or Plainview, Texas, both big market impacts. But without that filter, okay, sorry, they don't kill cattle there. Their specialty is making corned beef at this important Kansas plant. This is not a big deal. This is not going to affect the ability to process cattle, slaughter cattle, whatever. And so without that filter, though, of having the old days like we would have had up until 2015, where the pit, where people would look at it and go like, yeah, well, they make corned beef there. This is not a big deal. It seems like that takes a little more for that filter to happen. And I thought even late in the session yesterday, the market showed some recovery and was coming back. So yeah, coming in this morning, I think, at least I felt a little bit confident that, hey, this thing probably overdid it yesterday a little bit on news that isn't really bearish. And now let's go back to trading the fact that we're discounted cash, and cash had a great week last week. And let's see what it looks like for this week.
Yeah, what are you thinking about this week in terms of the cash trade? I mean, the 5-area weighted average came in just under 190. Are we going to blow through that this week or not?
I think yes. And I'm guessing, of course. But I still feel that there's enough of the bigger players here that are in the cash cattle business that need to have some cattle that didn't maybe get everything that they needed done last week yet. And you've got they've got a kind of a catch-22 if you're a packer here. Beef's moving. There's a little profitability to it. You got business ahead of you going into Christmas, New Year's, and I'm sure they feel like they're chasing. But I wouldn't at all be surprised that we, ask 195 or something like that. We may not get quite that far, but I think 1 to 2 higher sure in the cards. We did trade cattle as high as 192 late Friday here, and I think we can do better than that this week. The show lists here are very, very manageable. And for your listeners that are familiar with what the North is, the characteristic of the North would be, long-fed, farmer-fed calves, and we're to the end of that rope now. We're about through that whole deal, and supply will change dramatically here in December, as will the weights up in the North. And you start to see some hints of that weights coming down. Last week, the weights were down 4 pounds. Now we're 19 over a year ago, which is still enough, but at least it's not 35 like it has been for months and months and months.
Yeah. Follow-up question on the feeders, though. For the month, we were up almost 18 or more than $18. We're so overbought there. Do you think that market can keep going, or is it all dependent on when this border opens to Mexican feeder cattle?
It's a great question. You're going to get a C+ answer, I'm afraid. It's not normal for the market to go up this fast, okay? And so we're vulnerable to some corrective type action. But there's first, the one thing that's in play here is that the cash feeder market is really high, okay? Index is going to be another couple dollars higher today. The index is going to come in at over 259. January feeders are actually slightly below that yet. I know it's only December, but it's not like the feeder cattle are priced way above the current cash market. Now, the cash market can change quickly as well. So I think your last point there is important to remember. The people that we talk to here feel like this border closing is temporary, weeks, not months. And we've already got a week and a half under our belt. 3 weeks was tossed around here when the whole thing started from APHIS. So that the border is going to open again. Now, is that going to affect a sale barn in Napoleon, North Dakota? I don't know how much it does. Okay. Yeah, it's probably a factor if you're in New Mexico or Texas, but this northern feeder trade is just on fire. So yeah, they could break a little bit, but I think the reality of the deal is it looks like there's enough people out there that believe that ownership is the key when it comes to having some cattle around them, as tight supplies are very, very tight of this kind of animal, this yearling type steer. And, that's going to still put a prop underneath the thing because the cash index is so strong.
Is this new world screwworm really that big of a deal? I mean, we have just made a huge deal out of this. I don't know.
No, in a word, it's not. I mean, we had it once in the States in the 60s, and they figured out a way to eradicate it very easily. West Africa, Liberia, for instance, had it. They figured out a way to eliminate it pretty easily. No. Do I think it's a long-term market factor? Not even a little bit. But okay, I'm not a scientist. I'm just a stupid commodity broker.
Yeah. As long as we got ivermectin, I think we're okay there.
That's what they're going to use. That's the protocol. I mean, this is 100%.
Okay, so the other market that's defying odds is the hog market. The funds are record long here. They added to their record long position last week. What are they trading here beyond just the charts? Do they know something that we don't know?
It's amazing. We talk about the funds and we talk about fading them. We go, oh, they're way too long. You got to get out some time. You're way better off instead of fighting them, joining them. That seems to be the deal. But okay, now we're where we are. How do you react from here? It's December. This is the time of year we usually have a sell-off on the hogs. This is a seasonal low time, not a high time. Why do the funds do what they do? Because they're very pragmatic. It worked to buy them yesterday, so they buy some more today, and that'll keep happening until it doesn't work anymore. I know that sounds crazy, but that is what it is. So yeah, on one side they got the funds that got all the money, they're ahead. You got somebody that's short, a hedger or a speculator or a small whatever. Every day he's behind some more, and he goes, finally they all reach their breaking point at some point. So that's it. Get me out, and that buying fuels another chunk of it. So it will stop somewhere. This has been a historic type move. Not any premium to cash though there either. So let's see where it plays out. I'd be very careful. If I was a hog marketer, I would certainly have to be sensitive to the idea that taking advantage of this big rally, particularly as we start the month of December, would seem to make some common sense marketing sense to me. So
yeah, and it's felt like when we've had the pullbacks, maybe there was some hedge pressure for sure. So greens are all to the plus side. I'm sorry, I had interrupted. You do have that reversal down from last week. That's still intact, so we'll see if that isn't it on the hogs. You bet. All right, greens, all to the plus side here, but is this mostly a technical bounce? Because we went down and tested the contract lows in soybeans again here, or is it the lower dollar? What do you think?
It's really hard for me to I'd like to be super entertaining and tell somebody something about the grains. To me, the bean thing is we didn't break the lows again yesterday after about the millionth chance here. Same lows that we made in August, September, October, November. And just the fact that we weren't able to take those lows out probably prompted a little bit of short covering here is about all I can think of. I don't see anything else on the horizon. South America's got a big crop planted. It doesn't seem to be at any risk at all at this point. Non-threatening weather for sure. The corn thing at least is tilted upwards. There's things about the corn market that encourage me. You've got strong basis, better the spreads, the forward spreads are better. But the bean deal, look at the news we've thrown at it. The last report was friendly. We've had huge exports. We had record crush for November.
Great demand news, and the market fails. That's just not good, is it?
Yeah, I'm worried that just from a common sense standpoint here, that if we can't get up and out of here, if we flush these lows, break, maybe that finally purges whatever. and then we can rebuild something. It doesn't have to for me. I hope it doesn't, but that's how it feels to me. Like we're gonna have to see what's below the market here before we can rally.
Okay, thanks so much. Brad Kooima with Kooima Kooima Varilek. That is Markets Now.